Index funds 101. Let's talk about the difference between index funds, mutual funds, and ETFs. Now, if you're looking to invest in an index fund like an S&P 500 index fund, you can buy this index fund as a mutual fund, or you can buy it as an exchange traded fund, also known as an ETF. Now, examples of S&P 500 index fund mutual funds are VFIAX from Vanguard, FXAIX from Fidelity, and SWPPX from Schwab. And examples of S&P 500 index fund ETFs are VOO from Vanguard, SPY from State Street, and IVV by BlackRock. Index fund mutual funds definitely have some distinct features that make them unique. And index fund ETFs also have some distinct features that make them unique. So let's talk about them. Number one, index fund mutual funds can generally only be purchased directly from the fund company. And what I mean by that is if you were to invest in VFIAX, you'd have to open a Vanguard account, FXAIX, a Fidelity account, SWPPX, a Schwab account. On the other hand, index fund ETFs can be purchased via any broker of your choosing. So to buy any of these ETFs like VOO, SPY, or IVV, you could use TD Ameritrade, M1 Finance, Robinhood, or even apps like Cash App that let you buy stocks. Number two, index fund mutual funds are generally easier for setting up automatic investments. So let's say you wanted to invest $1,000 from every paycheck into VFIAX. Well, mutual funds will generally make setting up these automatic investments much easier. And in my opinion, this creates discipline, and it's great for dollar cost averaging into an index fund. On the other hand, with ETFs, not all brokers offer automatic investing. So in the same scenario, if you wanted to invest $1,000 out of every paycheck into an S&P 500 index fund, you'd probably have to manually do it every pay period. And the third distinct feature of an index fund mutual fund is that your shares in that mutual fund are bought and sold at the end of the day. But with ETFs, they can be bought and sold intraday. So if the S&P is down 2% at 10 a.m., I can place a buy order right then and there, and my order will be filled immediately. But at the end of the day, both are great options. They both offer low fees and expenses, and whether you invest in the mutual fund or the ETF, they both have the same performance, assuming they're tracking the same index and using the same strategy. At the end of the day, it really comes down to investor suitability and investor preference. If you want one-on-one financial coaching to learn more about index funds, please click the Stan Store link in my bio.